All right. All right, let's just start now. Like 2 more minutes, and anyone joins, yeah, I'm recording anyway. So, all right, let's start. So, for this one, I just wanted to quickly go over GBP USD because I know a lot of people are having a bunch of charts, bear charts on it, explaining whether it's buys or sells. And I haven't been too active on the Discord chat. I've been focusing on a lot, promoting a lot of new content for the course. So stay tuned for that. But yeah, let's get straight into GBP USD. So brand new chart, clean. Let's quickly start on the daily time frame, and let's just understand the overall market cycle of what type of cycle it's in right now. So looking at GU, we can see from here up to here we had this major expansion move up. Now the expansion just means that this is where buyers pushed price really high, and from here all the way up to here, buyers were simply just pushing price higher and higher and higher. Now at this point, exactly over here, this is where the market ended up starting its retracement phase, where we saw some type of bearish pressure. Now, because we know that overall structure on the macro time
Yo,
frame.
Trey, we can't see your screen.
Can I see my screen? Oh snap, my bad. Yo, my bad, guys. Can you guys see now?
Yeah.
Oh, my bad, guys. Let me restart that. I appreciate that. So yeah, once again, so GPUSD daily chart. Yeah, so from here, this point up to this point, this was the expansion phase. I know this because this is where price was just significantly going higher and higher and higher. Like it had so much bullish pressure. We can just see all that buy side momentum going towards the upside. Now up to here, when the market reached about 1.42, this is where we saw the first significant sell off. This is where the first significant retracement, we could say, happened. Hold on, let me just mute this guy. All right, perfect. So yeah, boom, we saw that major retracement happen right here. Now we know that there's a cause and there's an effect with everything. Hold on, let me mute this mic. All right, perfect. So we know that there's cause, and then we know there's effect. Now the cause is the cause of what's happening. So for example, an order block. If the market pushes up into an order block.
Yep.
Hello? Yo, can everyone quickly mute their mics, please? All right, thank you. So once again, so the cause is basically an order block. So if there's an order block, for example, right here.
Okay.
Yeah, so if there's an order block like right here, and then we see, for example, imagine this is the order block right here. This is the order block. Imagine price comes into it and then reacts off of it. The cause of this major reaction. Yo, whoever's talking, can you please mute your mic? I'll just mute you guys. Alright, my bad. Sorry about that. Yeah, so boom. Imagine this is the order block right here. Right over here, this is the order block. Price comes inside of the order block and then reacts off of it. So the effect was this major move down, and the cause was the OB itself. Yeah, whoever's talking, please mute your mic, or I'm gonna have to like mute it manually. So for example, right here, we see that the market ended up retracing right here. We know that there's obviously a cause for it. So if I quickly just draw like a horizontal line right here, and I look towards the left, we can see that this is where there's an OB. We see this last institutional bullish candle before that major move towards the downside. And this was clearly the cause. The cause of this retracement forming happened because of this institutional candle. And the effect was that the market sold off about like almost 500, well, about 565 pips. So like we said, there's cause and effect, which proves the idea that everything is calculated, everything has a reason, and every single thing happening in the market has an objective for why it's happening. So from here, we saw the market push down, and then we see another major move up. Now, if we look at this current high, you can see it did kind of get purged, right? Let me just get this out. Boom, we can see that it did kind of get purged with this wick. Now, is this considered as a break of structure? Technically not, because the candle itself needs to close above it, but we still made a new high, which means that overall we're still making newer highs and newer lows, or higher highs and higher lows. So after we did create that new high, what were we presented with? Well, look at this. We have that retracement phase forming, and then we have another expansion phase right back up. Now let me highlight this as blue once again. Now if we take our our fib, like we love using the fib, market from the low up to the high, we can see that we have tons of institutional candles inside of our blue zone. So the first blue zone is this one, the 70, and then we have the 78, and then we have the 88. Now, the first institutional candle was right over here, this big daily one. Now, obviously, you could have refined it, but the market didn't respect it. It went below it. If we go to the 12-hour time frame, we can see that the price came back perfectly into this 12-hour institutional candle. Let me quickly move this. Let me move the zone, make this a little easier to look at. You can see that we have a clean 12-hour institutional candle right here, and this is also at the start of that major expansion move all the way back up. So price taps in perfectly to it, and you can see that it came into the pip right here, reacted off of it. So this was the cause. The cause of this major move up was this order block, and the effect was obviously we had this bullish momentum. So we know that GBP USD was bullish after testing this area. So now what we're going to do is we're going to go down to the smaller time frames and evaluate the price action that happened within this zone. So let's go down to the 4-hour time frame and let's actually look at what price is doing. So we can see that as price came into our POI, remember this part is extremely important. When you do set your point of interest, for example, this is my POI, I'm not just waiting to see what price does when it comes into it. I'm waiting to see what price is going to do as it comes into it. So for example, as price came into it, I'm seeing these lower lows, lower highs form, right? This is important information to me because this is structure. What we need to see is this small little lower low, lower high, phase get broken, which gives us the significant. Before the tap in the OB and H12 when BOs happened in M5 and never came back like that. I'll get into that just now, bro. Yeah, so when we do see that, these lower lows and lower highs forming, this is really important information. This is telling you that the market is bearish. Remember, every single candle is telling you a story. As price taps into our point of interest, we see these higher highs, higher lows forming now, which indicates that our point of interest was correct. Now, if we go down to even the smaller time frame like the 1H, we can see that we have tons of lower lows, lower highs right here, right? Now, did we break it after we tapped in? Yes, we did. We broke a ton of structure after price tapped in to our point of interest, which means that our point of interest overall was correct. We even broke more structure over, sorry, not there, but like over here. We broke a ton of structure, which gives us more confluence on why this area is really, interesting to us. Now, a lot of people were looking to sell, or sorry, not sell, but buy in around these areas over here, this institutional candle. And technically speaking, this is correct, right? But the reason I wasn't really too focused on buying right here is for two reasons. One, liquidity. We saw that there's equal lows just resting right here. Boom. Let me just quickly, boom. So we have equal lows, a touch of support here, and then another touch. If we zoom into this on like the 15-minute time frame, this is a clean double bottom to like retail traders, right? It's a super clean double bottom every retail trader is looking to buy at, and they're assuming that the next time the market taps into this level, it's probably going to be doing the same thing. So to me, this was a clean double bottom, and that's why I didn't decide to buy at this OB, because I know that overall the market's attracted to liquidity, and wherever the liquidity lies, that's where market's going to go. So in terms of how we're going to be looking to enter on GPUSD, it's really simple. All we're doing now is we're just looking for the institutional candle that was the last down candle before the move up that was responsible for all of this bullish price action. So in this case, if I quickly delete this, in this case, our point of interest would be this 4H block, this last major down candle before that move up. Now, if I take my fib as well, from the low up to the high, you can see that it's also correlating with the blue the blue golden zones that we like to enter on, which is the 70, 78, and the 88, right? And for the people that don't have my settings, these are my settings right here, so we can screenshot that. I'm recording this anyway, so yeah, I'm recording, just making sure. So overall, we're expecting price to come back down into this level. Now, one more thing that I wanted to go over is we have liquidity over here. It's really short-term liquidity. It's nothing too obvious, but we have liquidity. Two, we have imbalance. If I do take my parallel channel and run it from this wick right here up to this wick right here, it's clean that we have imbalance resting all over here. Now, we also had imbalance from here. It didn't get fully mitigated. It came in a little bit and tested it just up to here. So let me just quickly do that and test it up to here. So basically there's tons and tons of reasons for why GBP USD should continue to fall down at least into this POI right here and then go up. Now for the people that are looking to buy at this institutional candle right here, you can definitely do that, right? Just because I say something, that doesn't necessarily mean I'm right. Trust me, there's going to be a lot of times where I'm going to be wrong and you're going to be right. That's just, the way the markets work. There's no way we can all be right. So it's about just understanding how you see the markets and view the market. So if in your POV, if you're seeing this institutional down candle before that move up and you're thinking about buying over here, then by all means, go down to the smaller time frames and look for your entry. So for example, we see these lower lows, lower highs. Boom, 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 boom. As soon as price taps into your higher time frame POI, you see this major move up. Now this major move up broke structure right over here. BOS top towards the upside. So it broke structure. Now you also have an institutional candle, this last major down candle before the move up. So if you were looking to enter, you could have easily entered with confirmation on this OB. And if you did account for spread, most likely you would have not got stopped out, because spread is about 2 right now. For me, spread is 20 pips on GU, so you wouldn't have gotten stopped out. This would have been a pretty easy trade. And then you could have obviously targeted the next high over here for about 34 pips, or you could target the imbalance that lies around over where'd it go? Right over here. Right over, you could easily target that imbalance over there. Now long term, what I'm seeing for GU, if we do go back to the 4-hour time frame, we can see that GU, let me just delete everything. GU had, so when the first OB happened and never came back to the big push, you have to wait another O to be created. So when the first OB happened and never came back to the big push, no, it's all about patience, honestly, because if GU did want to continue going bullish, it would have easily just made a rally all the way up to take out all these highs over here. It's all about just being patient. Because GU didn't quickly move away from price right away the way it moved over here, that kind of gives you an idea that you got to think of in terms of logically. If GU didn't push all the way up right now, there's definitely a reason for it. It means that the market maybe wants to generate some more liquidity around this area, take it out and then go up. Maybe it means that the market wants to retest this institutional candle and then go up. You have to think in terms of logical, like what makes more sense. So just because price didn't come back to this IC right away, that doesn't mean it's not valid anymore. It just means you have to be patient. So in terms of long term, what I do see happening for GU, we can all see this major manipulation zone right here. There's tons and tons and tons of liquidity just resting above, right? It's not the cleanest, but from a zone perspective, there's a ton of liquidity over here that has to get taken out. So we know long term, we don't know exactly when, but long term, GU is definitely 135% bullish. It needs to take out the highs over here. And overall, from a macro perspective, GU is just continuously making newer highs and newer lows. Now, one more thing I did want to go over is that from our 12H POI that we were looking at, which was right over here, we can see that it did get tapped in. This 12H point of interest got tapped in pretty nice, right? Now, if we go down to the 30-minute time frame, and remember, people always ask me, what time frames are you using? I don't have a specific rule of which time frames to go by. I literally go through every single time frame in general. So from the 15-minute to the 4-hour, I use every time frame just to give me an idea of what price is saying and doing. So inside of this zone of interest on our 12-hour, we can see multiple points of interest as well. So this whole big range right here is our 12-hour POI. Now, if we refine it, we can refine it up to this 30-minute POI, this last institutional down candle before the move up. Now, this last institutional down candle also, swept a bunch of liquidity. So for the people who did watch the higher probability IC videos, which ones to take, which ones to avoid, you would know that this is really, really high probable. The market created this liquidity over here, swept it, took it out, and then from here it went up. What's the hockey for changing? Oh, so it's just your keyboard. Go on your keyboard and type in 2. So 2, 3, 4. Just type in whatever, and then it comes up. So yeah, so it's pretty obvious now, right? We have this area of manipulation. Market sweeps that liquidity, and then from there we have this major impulsive move up that breaks structure. So there's a ton of reasons for for why GU might even come back down here. And that's why I always say wait for the confirmation. So even though we do have a 4H POI right over here that we are going to be setting our focus on, you could still have another POI, which could be this area right over here, because this area is still valid. This area swept liquidity, broke structure, and continued going up. So we have two potential POIs. Damn, thanks. Yeah, no problem. So we have two potential POIs, either this one or we have this one. Now, you could either look for confirmation in this zone, or what you could do is look for confirmation in this zone. Or if you don't like to wait for confirmation and you're kind of slowly just lazy like me, because I get super lazy, you could set limits for both. Set your targets wherever. And most likely one out of two of these would end up playing out, especially because you're going to be using a bigger stop loss. And due to that bigger stop loss, you're going to avoid getting stopped out. Most likely one of these two zones would end up playing out. Will you place orders at both POI? So for this one, I'm 125% setting a limit. This one, definitely. This one, I'm not going to set limits specifically because I want to wait for confirmation. If the market doesn't respect this one, most likely it's going to respect the one below. So there's things called a point of interest and an extreme point of interest. So I'll give you an example. Right here, when the market, theoretically, if the market is bearish, right, we have this consolidation and the market sells off. Now imagine we have an order block right here, and then we have an order block right here. The order block right here makes sense, right? If we take our fib from the low to the high, it makes sense. It's inside the the blue zone. This one's also inside the blue zone. Now the only difference is this point of interest is higher than the previous one. So if you have a point of interest higher, or above or below your point of interest, the one higher would be considered your extreme point of interest, and the one lower is just a normal POI. So in this case, most likely price is either going to react off of this one and go down, or it's going to continue react off of this one and then go down, right? And in this case, that's what we have for GU, but it's rather a buy side example. We have a 30-minute POI inside of our 12-hour institutional candle, and after price tapped into our 12-hour institutional candle, we had this, bullish schematic form. So at this point, I would be focusing on this area for a little bit more confirmation, and once price taps in here, if I don't get the ideal confirmation, I'll obviously be waiting for the next zone right here. The lower price you place always buy limits, or just when you don't have time. The lower ones, if it's lower, then I set the buy limit right away. If I don't have time, so for example, if I'm gonna be outside when I won't be, or I'll be sleeping and I don't have time to look at this, I'll set a limit for this one and this one. But once again, this me setting limits or waiting for confirmation doesn't mean that you guys have to do the same. I'll show you guys a good example. Let's go to GBP JPY. You guys saw how perfectly we called this out. We called out the buy from GJ right here, but because I was asleep, I missed the entry, right? I missed this major entry right here, and I saw the schematic, but because I was asleep, I missed it. A lot of people in the Discord, they didn't wait for confirmation. They just set their limits. So at the end of the day, don't copy what I'm doing. I'm just showing you guys what I'm doing, because it's right. But I want you guys to be independent and understand, from your own idea of what you want to do. So if you're awake and you want to wait for confirmation, then so be it. But if you don't want to wait for confirmation, just set the limit. But remember, you always have to make sure that you're following your rules. The trading plan that I created for the course members, it's on the course curriculum. Always look at that before you take a trade. Even now, I look at it every single day. I look at it and I ask myself, what are the confirmations for this trade? Am I following my rules? Am I trading with the trend? Is this high probable? I ask myself all these questions, and if the confirmations are there, I'll set the limit. But even if I have a little bit of doubt in it, I'm like, okay, wait, this doesn't seem right. I won't set the limit. I'll simply wait for the confirmation, if that makes sense. So let's actually take a look at gold now. If you guys have any questions, you guys can ask. You guys can ask away. How do you determine trend? What time frame do you use? Okay, perfect. So let's go to a random pair like USD CHF. I don't trade that. Delete this and then boom. So there's no specific time frame for how I consider the trend. Obviously, the higher time frame is better because you get a higher time frame long-term perspective of where price is going. But I'll give you guys a good example. So we can see overall, the market is creating lower lows, lower highs. We have a low, we have a high, and then we have a lower low. we created this downtrend. Now from here, we create this major move up. This major move up broke structure right over here. We see that break of structure. So that's your first identification that the overall trend is now potentially switching from bearish to bullish. Can I share Euro GPY to ask you something? Yeah, we'll do that at the end. So we can see that the market's showing lower lows, lower highs, and then price breaks above, breaking a previous lower high, indicating that the market is now moving in a bullish direction. And then as you can see, price taps into like an institutional candle somewhere like, you know, here, and then price continues with its bullish, you know, direction and stuff. So let's go to gold now, quickly do a quick case study on gold. I did post a video on gold, but for the people who didn't see it, I'll just redo everything right now. So let's check out gold on the daily time frame. Now, daily time frame wise, gold is definitely bearish. I don't care what any single, you know, guru says, gold is bearish. Just look at this beautiful lower lows, lower highs forming. Like, it's so obvious it's bearish, right? And let me give you my reasons for why I think gold is going to continue bearish for the time being. So we can see at this point, when gold came to 2071, we had this major sell-off, this major sell-off. So we have this major impulsive move down from here to here. Now from here to here, it's all straight bearish pressure, just simple bearishness. Now from here, we have our first deep retracement. Now what's interesting about this retracement, the market retested the last institutional candle that did what? One, swept liquidity. So we have equal lows over here. The market swept liquidity. Two, it broke a previous low and made a new low, right? And then three, there's imbalance here as well. So let me quickly check my parallel channel and boom. So price comes back into this area, this institutional candle, and then resells off once again. Now after that sell off, what did the market do? Once again, same exact thing. We created another new low. Right here, we created another new low. Make this purple or whatever. And then the market retraces back up to the open of that expansion back down. Now look at how clean this is. We have another institutional candle right here. You know, my bad about that's my phone, my bad. We have another clean institutional candle right here. Let me actually take from the wick, I think. Let's go to the second daily time frame maybe. Yeah, right here. So on the second daily time frame, we have a clean institutional candle right here. Last bullish move up before that major move down. Now look at how perfectly gold taps perfectly inside of our second daily time frame, retests that institutional candle, and does what? Continues its bearish structure. So we can see that overall gold is moving in a bearish direction. We do see these, you know, these fundamental newses that are telling us that, you know, gold is still bullish, but overall, if you're looking at a technical perspective, gold is bearish. We all know this. Now if we look at the daily time frame, and you know, let me actually just delete all this. Let's look at just liquidity. Look at this liquidity here. This is the cleanest thing I've ever seen in my life. So clean, right? Literally so clean. There's liquidity right here. If we extend this line, it's even nicer. You know, look at all this liquidity over here. There's a ton of buyers, you know, buyers that are buying this support that need to get taken out. So it makes sense for why gold is creating this lower low, lower high phase in the market, right? Now we did see this major move down right here. Now it's not finished. This move down isn't finished. We're expecting gold to come back down all the way down to here. That's what we want to see long term. That doesn't mean that gold is going to fall all the way down right now. It just means long term, we want to see that happen. Now, this move, we're expecting it to be our new expansion, like this one. We're expecting it to create a new low. So let's investigate now. So after gold tapped into our daily institutional candle, let me actually mark it up quick time. I hope I'm not going too fast, by the way. If I'm going too fast, just let me know. It's normal. It's very complicated to enter on gold sniper entry. Yeah, it's pretty. Yeah, that's normal. Don't worry, that's really normal. But yeah. So 4-hour time frame. Let's analyze what structure did. It taps into our POI on the daily time frame. We didn't catch this, by the way. This is hindsight. But yeah, taps into the daily point of interest and still continues bullish. You know, still continues bullish. But as soon as we tap into the second time, look at that major sell-off. That major sell-off did what? It broke structure right here. We broke structure of the lows. And what do? Well, obviously, we're going to be looking at the last institutional, you know, down candle or up candle before the major move down. And in this case, it would have been this 12-hour IC and then the market ends up selling off significantly. Now, obviously, we didn't catch this, sadly. It's whatever. That's just how the market is. We didn't catch it. But one thing I am noticing is that there's a ton of institutional candles within this breakout happening right here. This is that major breakout after that consolidation. Major breakout. And we also have a bunch of institutional candles here. So we have an institutional candle right here, right? We have another institutional candle right here. And then we have another institutional candle right here. Not only that, but we also have all this imbalance resting above from here to here, from here to here, and then even more imbalance from here to here. So there's basically imbalance and a bunch of reasons. Yeah, so yeah, exactly. It's forming a bunch of institutional candles and, you know, concepts telling us that it needs to go back up to fill all this up. You know, you guys have to think about it. Imbalances and order blocks, they're another form of liquidity. Not literally liquidity as in money, but what is liquidity? Liquidity is like a magnet, right? Price is attracted to money. Price goes to wherever the most money is. For example, you know, we saw this major manipulation zone right here. We had a bunch of stop losses resting below here at this, you know, equal lows. So the market pushed down because there's money there. But why is the market pushing up towards these imbalances, towards these institutional candles? Well, it's because it's attracted to it. It's like a magnet. So another way of thinking of imbalances and order blocks is thinking of it as liquidity. Not literally definition as liquidity, but it's another way of seeing it. So we're expecting price to go back up to fill in all this imbalance, all this ICs and stuff. But inside of this zone right here, if we zoom in inside of the zone, you're going to see the cleanest thing ever. I've never seen something this clean in my life. Like, I'm being dead ass. So if we go down to the 5 minute and all I did is I highlighted the zone, you know, the zone that the market is consolidating in. All I did is I highlighted it. Now look at this. Inside of the zone, what do we see? We see a ton of equal lows just over here. Market takes out these lows. We have a touch of support here, another touch right here, a second touch, a third touch, 4 touches of support. Market breaks below it, sweeps the money. As soon as we sweep the money, what does price do? It pushes up. Now within this major impulsive move up that we did see happening and forming, we saw breaks of structures forming as well. We saw a break of structure right here, right? Let me just move this up here. Boom, we see a break of structure right here. BOS top. We see a break of structure right here. We see I don't know who that was. Yeah, just try to keep your mic muted, guys. It's hard to communicate when everyone's talking. But yeah, so we see a break of structure indicating that this move up did break previous lower lows, lower highs, which does tell us that, you know, maybe this is the proper move up for price to continue going up to fill in that imbalance. Now, not only that, but below that, what did I say in the institutional candles video? I said if there's liquidity above or below an institutional candle, it's so much higher in probability. Oh snap, okay, we might have to end this and make a new one because time's running out. But yeah, so it's so much higher in probability. We can see that there's equal lows resting right here. And now what do we have below these equal lows? Well, let's go down to the 45. All right, nothing. Let's go down to the 30. Nothing. Let's go down to the 15. And there we go. On the 15-minute time frame, we're finally seeing something. We're seeing this last institutional down candle before this major move up that broke structure. Let me make this into an IC. Boom. We see this last institutional down candle before that major move up. And that's why we're looking to enter right here. Now, I saw another institutional candle on the 5-minute time frame right over here. So I highlighted this entire zone right here specifically because gold is like, it's really hard to predict. You know, it's really volatile. It makes deep pullbacks. So that's why with gold, I tend to risk a little bit more. And you kind of just have to be a little bit more generous with your stop loss, right? You can still risk 1%, but your stop loss is going to have to be a little bit bigger, meaning your lot size is going to have to be a little smaller. Now, if we highlight this zone, this is just about like 40 pips, nothing too crazy, you know, because it's gold. And this one is just about 30 pips, which is, once again, nothing too crazy, considering we're only risking 1% for each position. Now, we're entering over here. Our entry is supposed to be here. I already set my limits, like I said in the chat. And we're expecting gold to make a rally above at least to the first point of interest right here, this 4H institutional candle that we called out, at least up to here. Now realistically, there's a ton of imbalance over here, so I'm expecting gold to make another deep pullback up to here, which would be a really nice 857 pip move. And if we catch the bottom, it'd be almost 947 pip moves. So that's generally what I'm seeing for gold right now, forming at least. I'm expecting gold to come down, tap into that IC, and then take the buy up. How do you calculate positions on gold? Oh, it's really simple. So the way gold works is you have to subtract 1 0. So for example, here to here, if we zoom in, that says, sorry, okay, let's highlight this zone right here. Here to here, you can see the number is 3501. That's 4 numbers. So realistically, you would think, okay, that's 3,500 or 3,050 pips. No, it's only 350 pips. You always subtract the last number. So another example would be like right here. If we're looking to enter here, this says it's a 500 pip zone. No, it's only 50 pips. Right? So if let's go down to like the 15-minute time frame, and let me mark up the zone that I'm looking to enter on. So my zone or POI is right over here. Now, if we highlight this, it says that this is a 468 pip zone. No, it's only a 48 pip zone, or sorry, 46 pip zone. So now what you have to do is go on Google and type in your account balance. So what is 1% of whatever your account balance is, or what is 2% of whatever your account balance is? Now after you do that, calculate which lot size aligns up with your stop loss. So let's say 1% of 100 is like I think 1% of 100 is like $1, right? Or it's like $10. Yeah, it's like $1. So that means that you're only, if you have a 46 pip stop loss, let's do the calculation. Take your calculator out. 0.10 multiplied by 46. That means that's $4.60. So that means you can't enter the trade. That's only if you have a $100 account. Now, if you have a bigger account, like 1,000, which it would be 1% of 1,000 is $10. That means that with a 46 pip stop loss, you can use a 0.050 multiplied by 46. That's $23. We can't do that. So we can use a 0.03 though, right? A 0.030 multiplied by 46. So that's about $13, which is just under or just above 1%. So you can easily do that to calculate your position. I usually use MT4 position size calculator. Helps a lot since I'm not that good with math. Yeah, honestly, like I'm not good with math either. I'm literally the worst. But for me, I don't know why this one just makes a lot more sense to me to use. I don't know why. But like there's a bunch of websites you can use, like Sintu, like Wahi said, or Wasi. Could you give a quick example of an idea for an intraday trade? Oh, perfect. AUD USD. The one that we caught. It was an intraday trade, but we turned it into a swing trade. One of my favorite things. So right here, let's go to the 4-hour time frame. And right here, boom. So we saw that there's liquidity forming right here. Right, boom. Liquidity. It's not the cleanest, but there's definitely some type of liquidity here. Market sweeps it, pushes up. So let's identify, or let's look at, or let's go through what happened inside of the zone. So inside of the zone, I found this last institutional down candle before the move up. So in my head, I'm like, okay, bet. As soon as price taps into this, I'll start looking for opportunities to enter. And it tapped in. I went down to like the 5-minute time frame, and I would remember I was in this for a scalp. I was not in this for a long-term trade, but then I decided later on to turn this into a swing. So I seen market came in, and at this point I missed the first buy opportunity. Market came in, creating lower lows, lower highs, and then boom, we have this major break of structure up. I missed the first buy opportunity, but then I saw that right over here we have another major move up right here. And I think I was on the 15-minute time frame, and I was just looking for institutional candles that happen at the start of this major move up right here. So like right here, I just highlighted this major move up, and I found out an institutional candle that happened at the start of it. So one was right over here, and then I think the second one was on the 5-minute time frame. Yeah, this 5-minute institutional candle right here. So at this point, I set limits for both, and my initial target was right over here. Right over here. So that was the first target for like about, I think that's like 20 or so 47 pips. And then that would have been an easy intraday trade, because think about it. we're on the smaller time frames. We're doing the exact same thing as we do on the higher time frames, but we're just implementing it on the smaller time frames. For example, let's look for another intraday opportunity if you wanted to take a a seller buy. Right here. Okay, so we're on the 5 minute time frame. Actually, no, that's a horrible example. My bad. Let's go down to like the 15 minute, because I don't really trade intraday too much. The only time I trade intraday is when I'm like really lazy. But yeah. Okay, so I think I found one. So right here we see a bunch of liquidity forming right here. We have a ton of money resting above. Now above that point of interest, let's go down to like the higher time frames to find an institutional candle inside of the zone right here. So right here, boom, we see a last institutional bullish candle before the move down that broke a ton of structure, and then we also have liquidity here, right? So you can see that liquidity gets grabbed, market taps in after sweeping the liquidity into this 1 hour IC, and then from here it just ends up selling off. So intraday, it's the same exact concept as what we're doing on the higher time frames. It's literally one-to-one exact same thing. The only difference is you have to implement it on the smaller time frames, and the rules slowly kind of differ. So instead of taking every single institutional candle, you might have to focus on the ones that give you the biggest moves towards the downside or upside. So like for example, this one gave you a pretty deep move, cleared liquidity over here, broke structure, and then we had liquidity here. So this would have been a nice opportunity if you were looking at intraday. Sadly we didn't catch that, but we did catch this intraday move, and we are still holding this. I did turn this into a swing trade. We're holding this up to 4H levels right over here. So this is right now running. This would be like a decent 52 to 1, but running wise I think we're only running like 20 to 1 or something. I'm not too sure. And I did send this to the Discord for the people that are wondering. So it's right now it's like running 22 to 1, which is pretty decent. Also, I'm not gonna mention this right now because the Zoom way, it'll take way too long. Like it'll take me hours. I'm actually making a video on it. I've made the first part to it. It's this indicator, right? It's explaining this indicator. It basically explains where the Asia highs and the lows are. I already made the video for it. I just need to edit it real quick, and I'll have it running for all you guys really, really soon. But trust me, this thing is a demon. This thing is a monster. Though, like, I'll show you guys an example of how you could have caught this. So for example, this range, it tells you that this is the Asia range, right? Asia session, this was the range of Asia high and Asia low. Now below the low and the high, there's buy stops on the highs and there's sell stops on the low. So the sell stops got taken out. So that's the type of liquidity. The market sweeps the liquidity and then goes up. Now, obviously it didn't come all the way back down to here, but it came to this IC. But realistically, we would be expecting price to come back into this IC and then continue going higher. I'm making a really in-depth video on this. Like, trust me, give me like a day or two and you guys will all have it. But like, yeah. What time is the Asia session? So for me, I think it starts at like, hold on, I don't even know. Let me turn my session indicator on. So it starts at like 22:55. That's like military time. So 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So that's like, oh shit. Not sure what just happened. All right, let's do this. Damn. You guys can hear me?
Yeah, we can hear you.
All right, perfect.
Can't see your screen though.
Yeah, I'll just share that right now. Give me a sec. You guys see now?
Yeah.
All right, perfect. So yeah, like this one, like the indicator thing, I'm gonna explain it. Don't worry. Like the video's coming just now. It's really simple. It's self-explanatory. But yeah. Now the session times. Honestly, I don't know the session times myself, but I just use an indicator, right? So this indicator is called sessions on chart. I showed it on the course thing. Oh snap! Let me just admit this all real quick. One sec. Admit all. Just gonna quickly remove the thing. It'll go away. All right, boom. All right, everyone should join now. Yeah. So basically, I use this thing called sessions on chart. Yo, whoever's talking, could you mute your mic, please? I appreciate it. Thank you. Thank you. Type the name of it. All right, got you. Sessions, or I'll just show you guys. You can screenshot it. So go to indicators and type in sessions on chart. It's this one right here, by Aurochs. AUROCKS. You guys can type it. Oh snap!
You can see your video, man.
Oh my bad. I'll show it right now. My bad, guys. You guys see now?
Yes.
Pull that up.
Perfect. So yeah, that's the indicator. It just shows you the session times. So that's, you know, sessions on chart by Aurochs underscore AIF.
Can you mute everyone?
Okay.
Yeah.
It is.
I don't know why everyone's talking right now. Give me a sec.
Hang on 1 second here. I'm sorry.
All right, there. Everyone should be muted now. All right, yeah, perfect. I'll share my screen now. All right, I muted everyone. You guys could hear me, right? So basically, let me just delete this. When gold gets into a macro POI zone, do we still monitor it down to the 1 minute for micro shifting, or you think we should go buy a larger time frame since gold is more volatile? Oh, that's a good question. So because gold is really, really volatile, I don't try to look for confirmation. In all honesty, I don't really look for confirmation with gold. Most of the time, the way gold moves is you just have to be right about the point of interest. That's the major thing you have to be right about on gold. So I'll give you guys an example. We caught a buy from gold right over here, right? We saw the break of structure. I called this out like a long time ago before this even happened, but we saw the break of structure of the high, and we saw an institutional candle right here. That's literally it. I saw the IC, I saw the break of structure. I set my, I refined the zone obviously a little bit down to like here, but you just have to be right about the point of interest. So I don't wait for confirmation when it comes to gold. So for example, this one right here, this, trade that I'm looking to enter on, I'm not going to look at confirmations. I simply set my limit. I set limits for both, one right here and one right here. And as soon as price taps in, I'm in. If it takes me out, it takes me out. If not. Yeah, so the smart money trading will work forever or not? Well, I mean, with anything you do, obviously it's going to stop working at one point, but it's going to take years for that to happen. Because one thing you guys have to understand is the banks don't literally trade with candles and price action. They have like sorry, give me a quick sec. So basically like, yeah, so the banks, they don't trade like price action and stuff. They have like candlesticks they trade, right? I mean, they have like what do you call it? Like a robot, I guess you could say, it's like a program that trades for them. They don't really trade order blocks or, imbalances. This is footprints. I always said this. This is simply footprints in the market that we can use to follow what the banks are doing. So as the banks don't trade imbalances or order blocks, but that's their way of showing what they're doing. And that's our way of understanding how they, move. So to answer your question, long term, I don't think, it'll be an issue. But like for now, just focus on milking this strategy as long as you can and just use it until it stops working. And it shouldn't take a long time for that to happen. Yeah. But if you guys have any more questions, let me know now, because I also have to go really soon. My mom needs some help with something. So yeah, any questions, let me know now. I'm gonna stop sharing my screen. You guys want me to go over any pairs or look over at any pairs for you guys real quick? AUD CAD? Sure, I got you. AUD CAD. Oh man, it missed the limit. Alright, so I actually called this out on the group chat a long time ago. Alright, we'll go over. I already sent USD CAD in the chat before. And then okay, GJ. So this one, I think, yeah, I called this out a while ago. So I missed it by like not even a pip. But yeah, so AUD CAD, you can see that overall we are moving in a pretty bullish market. Let's go to the daily time frame and let's just look at this daily little trend. So daily trend wise, we're definitely moving bullish easily. This is our last higher low that the market created. So in order for us to be fully 125% confirm that we're bearish, we would have to break below this level right here. Now if we go down to, like, I think it was the 12 hour I had, like, there's an IC, yeah, right here, there's an institutional candle right here. Oh, I'm not sure what that is, my bad. Alright, boom. So we have an institutional candle right here, and basically price taps into that institutional candle. And if we go down to the 1 hour, you can see that we broke structure of this previous lower low, lower high. The market broke it right here and made a new high. So at that point I said, okay, bet, I'm gonna focus on the open of this major move up, and I'll look for an IC. So I think I was on the, I'm not sure which IC I marked up. I think it was the 8 hour possibly. No, not the 8 hours. Let's go to the 4 hour. Let's go to the 5 hour. 2H. So in really, I literally don't know what IC I use. Hold on. Okay, so it was just right here. It was from like this institutional, candle up down to this one, and then I refined it. I remember now. So then I refined it down to like this institutional candle right over here. I refined it up to that one. So that's why it did end up missing me out. But AUD CAD, I see it going up from here. There's a ton of liquidity resting right here at the highs. Liquidity top, bunch of liquidity that needs to get taken out. I see it at least making a run up to here. If not, most likely up to like, the next daily high, which I would think would be right over here. Because then we also have a ton of imbalance from here to here. We have an institutional candle. We have another institutional candle. We have a bunch of reasons for why AUD CAD has to go up. H4 Euro JPY. All right, let me take a look at this. So H4 Euro JPY M15 at the same time. The order block will be valid or not, because I'm always lost when that happens. Okay, so let me see that. Oh, okay. So the OB you're waiting for, I'd still wait for it, because price hasn't fully made new highs. Until it makes new macro highs, your OB is still valid. So the area you're looking to buy at is still valid. But if we zoom into right over here,
Yeah. TKO burger.
hold on, let me just mute this guy.
Peter.
If you want it like that.
Alright, my bad, guys. Yeah, so there's also another POI you could shift your interest to, which is right over here. This last bullish candle. Obviously this one is a little bit better because it's lower, but you could focus on both of these obviously. And let's go up to here. Second one, you said M15. Okay, yeah, so yeah, you could set limits for both of these. Risk 1% each, but like I said, you could also focus on, okay, so there's liquidity now. That makes sense. So yeah, these two levels are still valid in my opinion. You could still focus on this just in case, but make sure you wait for the confirmation. But these two levels are still valid until the market makes new macro highs, daily 4 hour highs. These levels are still valid in my opinion. So yeah, see what else you guys got. When price misses our POI, we mark up and shoots the way we were expecting. In your opinion, is it usually some sort of Wyckoff schematic on the lower time frame that was happening that we could try and recognize instead? Well, it depends, right? It depends on each setup, because each setup has its own different way of identifying itself. So it could be Wyckoff, or it could be that you refined it too much. If you are missing your entries and the market taps into it or taps near it, not into it, misses it by a couple of pips, it's most likely because you refined it a little bit too much. So just like I did on this trade for AUD CAD, I refined this a way too much down to the 30-minute, like up to here, right? And it doesn't make sense. So try not to refine your POIs too much. Just keep it realistic. Did you look at GJ? Yeah, okay, I'll look at GJ now. JPY. So GJ wise, I'm really pissed I missed this entry. That would have been like a clean, like, what is that, 374 pips, whatever. But yeah, at the end it's whatever, it's whatever. We can't control that. But yeah, so on GJ, as soon as we came here, we created this low, lower high, lower low, right? Or you could take it from here depending on how you would do it. We didn't really break any significant structure in my opinion. We didn't break any significant like lower low, lower high structure, unless we're looking at it from this perspective. If we go down to like the 30-minute, you could definitely say that we broke structure right here, right? We broke structure over here, and we broke structure like over here as well. So On the 4 hour, there's multiple points of interest for us to focus on. And if I delete everything right now, a few of them would be like right over here. This is one POI and this is a second POI. Now you could refine these obviously down to like the 3 hour maybe. Let's refine this up to this one. And then from here we can go down to like the 2 hour. This one can get refined up to here. 1 hour. We can refine it up to this last bearish candle. And then I think the 45, you can't really refine this anymore. Yeah. You could refine it down up to here, but like that might be a little bit too much, but that's the most I would refine it. Now, if you take your fib zone, high to the low or low to the high, you can see this one is in like the, our blue zone. This one isn't. It's still valid, but the probability isn't there anymore. So once again, extreme point of interest and normal point of interest. For this one, wait for confirmation. Bro, whoever's like talking, please mute your mic. Alright, there. So we have a point of interest right here. And then we have an extreme point of interest right here. I would set a limit over here, and then I would, look for confirmation over here. Now, one thing I do want everyone to keep in mind is that the 4 hour is still generating liquidity. We are creating money right over here, right? That's a really strong thing I want to keep everyone in mind. We're creating money over here. So keep in mind that GJ can easily sell off to take out all that money and then tap into a 4H IC, or these two institutional candles right here, one being right here and then the second one being over here, and we can refine these, obviously easily refine these. So keep in mind of these two zones, but overall GJ should definitely either use this one or this one, and if these twos aren't respected, then it's easily making a run down to at least these 2 point of interest right here. What about the current bounce? Do you think that it's going to fill the imbalance? I'm not sure what just happened. Do you think it's going to fill the imbalance on the drop this morning? Oh, let me see. Oh, you mean like do I think it's gonna fill like all this imbalance over here, or do you mean do I think it's gonna fill in this imbalance over here? Last one. Also like down over here. Yeah, I think it'll definitely make it run back down here to fill up all that imbalance. So if anyone did catch sells, okay, so this is what I would do. Sorry, I think I have to end this soon. My laptop's gonna die or something. But I would, if you are holding sells. Oh, where we are now. So up to here. This imbalance over here. Oh, okay. So yeah, possibility. You could definitely. There's an imbalance here to here, and there's an institutional candle over here. It looks like it is making a run to fill in this imbalance right here, right now. But I'm not selling. Like in my opinion, GJ, even though it makes sense for all this, all this noise over here to get taken out, it can easily just continue going bullish. So it could fill in this imbalance and you can, catch the sell possibly, but I don't feel comfortable taking sells right now, so I'm just staying out. Yeah, I'm in the buys. Okay, good. Nice. So depending on wherever you entered, like yeah, it's like yeah, see guys, like my laptop is literally like AIDS. I don't know what's happening with this. I might have to end this now. Only buying. Yeah, I know what you said, you're buying. So good time to buy. But like at the same time, just be really wary of it, right? Make sure you're managing your trade, moving stop loss to break even, and yeah, everything should make sense. But I'm gonna quickly end this now. I don't know why my laptop's having a bunch of issues. I might even have to get a new one and resell this one. But like yeah, you guys have any last second questions or any questions? Let me know last second. Thanks, Jack. All right, perfect, bro. I got you. No worries. All right, guys, I'm gonna end this now. Good session. Can't wait for more in the future. But yeah, take care. See you later, guys. Peace.